The upcoming earnings report from tech giants Apple, Amazon, and Microsoft, coupled with the Federal Reserve's monetary policy meeting and the release of the non-farm payrolls data this week, really can provide some direction to the stock market. Now, these events will provide valuable insight for the overall health of our economy and whether the markets will continue to maintain their momentum or volatility will persist. And that's what we want to be talking about today. So let's kick it off with economic and stock market risks. The current market environment really right now is characterized by volatility. Now, just compared to 2 weeks ago, yes, we've had an increase of volatility, but investors now are more hedged, what this is called, against potential disappointments from all of these different companies in their earnings than what they were just a couple weeks ago. So what ends up happening then, as they really come through and the earnings reports come through, these positions will be unwound. And what that means then is that they give up the hedges, and that alone could potentially drive the markets higher. So when we take a look at all of that, that could be great news. But what we're also starting to see is that the landscape that we're in right now is really something that the Federal Reserve is not only eyeing, but will likely implement a rate cut. And the question is now, how many? So it used to be if we were going to get a rate cut this year, now it's just to the point of how many will we get. And that's the information that the Federal Reserve will be coming out with because of the fact the economy has slowed. And right now we are in what we call lead 4 environment. So we have a slower growth of the economy and slower inflation. But that is due to lack of demand, not because of just inflation coming down in general. So when this happens, that's not a great place to be. But then we're going to be transitioning back to lead 3, where we have a stagnant economy, but an increasing amount of inflation, more so for the rest of the year. Now, that is going to be marked by fits and starts of the stock market, and we still have a potential to go higher. But interestingly, when we talk about all the different areas around the world, it's India that is really in a great environment. They're in lead 1, where we have economic growth, and they have some of the best in the world, and they have low inflation. So that is a very big contrast to where we're at right now, and is a really good place to be, really, for the economy and for the broader global economy. Let's transition to portfolio changes. It's always advisable to reevaluate your portfolio over time. Now, here at Lions Wealth, we are doing exactly that. And the differences that we're starting to see now is that we are seeing an increased exposure really starting to happen for defensive investments. Now, this is really in line with what we're seeing, but when we start to mirror that with utilities, bonds, healthcare stocks, they can all provide some stability during these volatile periods of time. So that is really what is actually doing pretty well right now. Because utility companies, let's take a look at them for instance, they tend to really offer relatively consistent earnings and dividend payout, which people really like in, well, unknown times, because it's reliable. It's a reliable choice. Same thing is true with bonds, whether they're corporate bonds or whether they're bonds from the Treasury. They can offer a little bit of a safe haven and produce some income. Now, yes, this is only for a short period of time, and bond prices have been really all over the place, but they do offer some really good protection against some of these unknowns at different times of the economic cycles. Healthcare is another really interesting piece as well, because it really has inelastic demands. And with all the different population trends and some of the things that we're seeing right now, they do offer that really, well, critical aspect, unknown. And that's really what we're seeing right now. And that's the reason why they can actually provide some stability when we see all these unknowns of the stock market and the economy right now. Let's turn our attention to wealth management and advanced planning. Over the last few years, we have seen a lot of changes that have occurred, One of them is what we would characterize as a retirement misconception. Now, what I'm talking about here is just a lot of things that you're thinking about that may actually not be true. One of them is the fact that you may downsize in retirement, which may or may not happen. And that is one of the aspects here that we want to really discuss. The idea of downsizing your home, possibly even the money you're going to be needing in retirement, all of that may be true right now for what you're thinking, and especially on your home front, it may seem really appealing, but it's also important to consider all the potential downsides of doing that. You see, on the financial front, a lot of times you're going to be using about the same amount of money that you were spending prior to retirement. So that may be the same. But if we're looking at the housing, maybe your needs have changed because the kids are out of the house and things have changed with your living styles and status. Well, if we want to reduce the size of the home, that can actually help to save on maintenance and save on just the overall headache and all these other aspects, but it also may lead to some other really feelings that are going to crop up, especially with the unknowns of being overwhelmed. And when it comes to whether it's cramped quarters or home maintenance responsibilities that may or may not have been there before, it's really necessary to take a look at your living space. And before you make the decision to reduce the size and get a different home, there's a lot of factors to consider. Now, whether you want room for storage and some of your belongings, whether you want to accommodate guests or even your children if they come back to visit, some hobbies, gardening, all of those different aspects are good things to consider. Or whether you have animals and you want a proximity to trails or for biking, hiking, and the like. Those are all things that are coming back to your lifestyle. And when you take a look at this, it's really actually something that you can be working into your overall wealth plan. Really the ability to have the house that you need in the location that you want and figure out if that's going to be very helpful for you. So that does not mean that you need to move into an independent living community or downsize. It may mean that you stay where you're at, because it's all the different things that you need in the place that you need it to be. So those are all different aspects to consider when you're looking at whether you should choose to downsize or not. And we don't talk about this enough, but that could be one of the pitfalls of retirement if you choose to downsize and then your lifestyle doesn't dictate it. So it's a really good thing to consider. And that's why we want to talk about it today as well. As we're wrapping up, I want to talk about our second opinion service. This is a reminder that if you have people that you care about who need a second opinion or want a second opinion on their overall wealth plan, we're here to help. And we're going to conduct a discovery meeting to fully understand and identify their situation and gaps. Then what we're going to be looking at are those gaps and ways that we can provide some recommendations on improving them. Now, this could just be going back and saying that they're in a great place, or that there may be some significant gaps that need to be addressed. But either way, they'll be in good hands knowing that they have a second opinion on their overall wealth plan. So that's really what that's involved. And if you do have someone that wants to go through the second opinion process, it's complimentary to our overall wealth plan. Click the link below and you can actually input their information and we can get in touch with them. And if you would like to learn more, you can do the same. Click the link below and put in your information and any questions you have on your overall wealth plan. With that, take care.